Hi traders and welcome to the Technical Analysis Market Watch on Friday the 5th of May. So we're entering into another non-farm payroll result, and the market has certainly been volatile this week. We've seen some earnings hit and miss, but we've seen some big volatility in some of the key indices and currencies. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll jump straight here into the Aussie USD, and you can see that, look, the Aussie survived an interest rate rise earlier in the week, and you can see we had a little bit of mixed reaction to it, I guess. But look, what we've seen now is a pretty strong bounce from the level that has been recent support. You can see we were down here at the high 50 or 65 sort of cent mark, 65.80-ish, has been very, very strong for the Aussie USD, but we've had a pretty big bounce, and this week's been pretty strong. We've got a couple of wick candles up at the very top most recently, but it is trying to really get above that 20 moving average, which is obviously very important. Look, it's fast approaching a very strong resistance zone, so realistically it is trapped in between these two levels. That 67 cent mark is an important zone for it, because obviously all of the previous history, you can see right through there, very, very heavily involved price and buyer and seller dynamics has been very, very strong and prevalent in these areas. So we would expect that even if it does get to that level, which it did only a couple of days ago, it's going to find resistance getting through. Now, I'm not interested in trading this one long until it actually does break through and starts trading above that 67 cent mark. And when it does that, it opens up a whole different avenue of opportunity. Yeah, then we're starting to look at the 67.80, 200 moving average, then of course the 68.50. But until it does that, I think we just have to play the game inside the range that we're at. It's positive that it's actually above the 20 moving average again, but it does have problems right in front of it. So let it break through, and then if it does that, then we can start looking at longer trades. If indeed it does start to reverse from this point onwards and we start to see a series of lower highs and lower lows, then we've got a pretty easy target to aim for with the 65.80. Obviously holding up again and proving to be quite a force on the downside as well. So yeah, stick within this range until we get a breakout, and I think we should be, reasonably equipped to actually get some good scalping, I guess, pips out of this, because I think we've got effectively 100 to 150 points of easy movement inside this range until it does eventually break through. So just trade the range until we get a clear break. All right, we'll move over to the US dollar CAD. Another sell-off now in recent trading. You can see that we failed to make that new high. Like I said, I was talking last week about the support that we've got here, and it is extraordinary support. It did hold up, and it did try to fire off and get to the new resistance level, but it didn't quite make it. And as you can see, we reversed before we actually made a new high, which is generally a telltale sign that we're starting to get a little bit tired here on the CAD. When it can't even reach the obvious resistance and it can't make a new high from the previous one, you do definitely start to worry a little bit about the momentum starting to shift. It's still got the base that we talked about though, so until it breaks that base, there's nothing really doing here. You got the 20 and the 50 moving average and the roll reversal zone at 135.20 to contend with on the way down, and that may well give us another leg up to potentially scalp it back up to the 136 or 136.50 level, but I wouldn't be aiming much higher than the previous high until it actually proves it. So if we get a series of lower highs and lower lows below the 135.20 and a daily close below this level, then the next obvious target's going to be that 134.20. But really, it's a bit of a trade what you see with CAD. Remember, it is non-farm payroll today, so we're probably going to see a little bit of light movement really until we actually get a result. Next week's trading is going to be very interesting. I think once we get the non-farm payrolls out and we've got a few more key earnings results for the rest of the week, it's going to be a very, very interesting time next week, because the volatility has certainly kicked in. And the old adage of sell in May has certainly started to play out on the indice, which we'll see a little bit later on. So just keep an eye on this one. A series of higher highs and higher lows on a smaller time frame. You can aim for around that 136.20 to 50 area, which is the previous highs. A daily close below 135, and then we can start to target the 134.20. But again, it needs to do that, and until then, we just trade what we see with the CAD. Okay, over to the US dollar yen. no real surprise here that it sold off from that resistance zone. 3 days of pretty heavy selling, and you can see we've hit that level again where we would expect to find some sort of support, the 134.20 to 134 area. You can see here that we've basically hit the 20 moving average, 50 moving average, and 200 moving average within this candle. And if it's going to find support, this is the place it's going to. I'd be looking for potential long opportunities from this level if we get a series of higher highs and higher lows on a smaller time frame, and then either aim for the 135.20 in the first instance, which is only the initial scalp. But if it gets above that level, you can start aiming again for that previous resistance. But yeah, no real surprise that it did sell off here. It did the exact same thing last time, and like I mentioned last week, when these levels do get hit, they do generally get respected, and at 138 is a very key level for it. You can see that it's been very, very strong for a very, very long time right through these levels here, and it is a role reversal zone. Remember, it's not just resistance, it was support on the way down, and that generally bodes very, very well for it. But you know what, the trade up there was a good one, and hopefully you're able to take advantage of that and take profit in this area where, you know, the 137.50 is the real target for that. And yeah, this is another support zone for it though, 50, 20, 200 moving average, and a roll reversal, mini roll reversal zone as well. You can see the peaks and the troughs there being resistance and support at the same time. So if we hold up above here and close above the moving averages, especially after a non-farm payroll result, this is where we're opening up next week, then it usually bodes pretty well for some pretty good trading for the way up. And we know we've already got a pretty clear-cut target. If, of course, we break past this level and we get a daily close below the 133.50 area, then the next logical target's the 131. So we'll keep an eye on that one. But again, expect probably a little bit of slowness until we get a non-farm payroll result, because these aren't often big movers on the day. Over to the dollar index now, and it's still holding up at around this level. Look, it's becoming very range bound now, as is the euro, which we'll touch on in a second. It's at support again. At that 150 level is basically the level where it's touched several times, and you can see that it's bouncing off it, but it's still trading under the 20 moving average. And while it's doing that, you know, we can't be very buoyant on it. If we get a close above the 20 moving average, very different story on the daily. But until then, it's going to probably stay up in this range until we either get a daily clear break below. So that could be below the 130 level, which is what's going to be required here to get below all of these lows. If we do that, then we're going to see a surge in the euro. But of course, if this level holds up, the euro is probably going to hang around that 110 level. If we get a close above the 20 moving average, then we know we're going to see a weakening in the euro. Over to the euro. And yeah, again, look, very similar to the dollar index, but in reverse, of course. The 20 moving average held up again. No problems there. It's been its friend all the way up. Look, this level is still very strong. It's tried to break through and sold off every time. Like, you know, it's reached highs sort of around that mid 110 level. But until it actually breaks through and gets past that level, we can't really take this move seriously. It's no real surprise to see it moving sideways because the dollar index is at a very strong support level. So yeah, no real surprise there. But until it actually does break through, we can't really look for a long opportunity. It's at very, very heavy resistance, and that heavy resistance has to be broken before we start getting involved in a trade on this one. If we get a daily close below the 20 moving average, then we're going to start to target that sort of 10. Probably the 108 is probably the real target for this one, but there are a couple of parking spots on the way down around the 108.50 and the 109. The big round numbers are going to prove to be a little bit of support for it, more than likely, unless we get a very, very big candle that actually breaks through and breaks all that support in one hit, which is probably not really. It's been very steady most recently, so we can probably expect that it's going to hover in the range between the resistance and the 20 moving average for now. If you are going to scalp it, it's going to be very, very short-term scalps, because they are literally, the range is getting more constricted by the candle. So until we actually get a breakaway of those moves, it's going to be hard to get a swing trade on it. But the scalping opportunities are within the 110.50 and the 1980 levels. If you scalp between those two levels until we get a clear break below the 20 moving average, and if we do that, 108 is the target. And of course, if we break through the resistance, then we'll wait for it to come back and test it from above, and then we'll start looking at long opportunities. But still, resistance is very heavy here on the euro. And the last one we'll have a look at is the US 500. Look, this market's still open, obviously. We've still got an hour or two of trading in the US. And you can see here that we've got you know, the resistance was hit, and you know, no problems, came down, you know, 4 days in a row. We've got a very big indecision candle at the moment, but remember, this market is still open, so it could, where depending on where it closes, if it starts closing on a slow and we're traveling and closing below the 40-50, it's not going to bode very well for the result in between, just before non-farm payroll. But if we do get a bit of a surge up and we get closing above the 40-80 or the 4100 again, then that's going to look, you know, relatively bullish. And potentially, if it holds up through the non-farm payroll result and it's still trading above, it's probably really more about Monday now, or even an hour after non-farm payroll in tonight's trading. If we get a close above the 4100 after non-farm payroll, we can start looking at long little mini scalps up to around that 4150, or even up to the previous resistance at 4180.75. That area there has been pretty strong resistance, but no real surprise to see it sell off. But if we do get a close below the 40-50 area after non-farm payroll, then it's more than likely going to have a pretty ugly week next week, and we would probably start to expect the 39.50 to be the next real target, which is, if we get a break below this level, it should have a gravitational pull down to the 39.50, because that's a pretty likely scenario for it. But definitely, yeah, probably we're going to have to just obviously watch what happens at non-farm payrolls, see what the result is like and how the market reacts, more importantly, not so much the numbers, but how the market reacts to it. If it's trading above this doji, it bodes well for next week and in the New York trading tonight. But of course, if it closes lower, we can start to target the lower moves down to 39.50 in the first instance. So I hope everybody's had a great week's trading. Look, we've seen plenty of volatility, and the moves have been there, and all the levels we talked about last week, for the most part, were hit. So hopefully you're able to take advantage of those. I hope you have a great weekend, and I look forward to seeing you all next week.